Good morning, everyone, and thank you for joining us this morning for the Singapore Trading Festival 2022, jointly organized by Singapore Exchange and Equities Tracker. Just a quick slide right now for all of you to remind you that there will be many opinions expressed by our speakers today in their personal capacities. And to our online audiences who have just joined us via Facebook Live, a very warm welcome too. My name is Edward Choi, I'm your host for this event. Folks, we find ourselves at the crossroads of what is likely to be a significant period in human history. And the decisions that are made here by nations, by institutions, and by individuals like ourselves will likely have an outsized influence on our collective futures, which is why I want to congratulate you on the choice you've made to join us for this event today. Over the next 2 weekends, you'll have the opportunity to learn from some of the very best minds in the finance industry to help you to gain an edge, or as traders like to call it, alpha, over the rest of the market. To get us started, we have the head of equities from SGX, Mr. Michael Syn, to tell you more. Over to you, Michael.
Thank you, Edward. Good morning, everyone. And actually a good evening to friends joining us from the other side of the world. I'm Michael Syn, the head of equities at Singapore Exchange. And on behalf of Singapore Exchange, I'm so very pleased to welcome over 5,000 participants for our second ever Singapore Trading Festival. Now, I'm just back from 2 weeks in the US, meeting customers, not just in the traditional finance hubs of New York and Chicago, but also the hot new emerging hubs in Florida and Texas. There were many macro topics of discussion ranging from China to carbon to crypto. And of course, very topical during my trip was the rolling 24-hour news coverage, TV coverage of the situation evolving in Ukraine. And therefore, yet another huge shock to commodity and financial markets as a result. All eyes then and now are on the Federal Reserve. Will they finally come to terms with the risk that inflation is getting entrenched, driven simultaneously by both supply side and demand side factors? In other words, that inflation may no longer just be a temporary price adjustment due to COVID's impact on supply chain. And therefore now, how high and how quickly will the Fed raise interest rates? Well, 2 years ago, if you're watching the markets from home, you were mainly flanked all around you by growth companies, from Zoom to Alibaba to Grab. It was all about growth, 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 regardless of profitability. Because back then, interest rates were zero or even negative. A company could borrow and spend today to buy customers, accelerate growth, and then wait for profits tomorrow. So instead of having jam for breakfast today, I'll wait for jam tomorrow. But as interest rates and credit conditions tighten in front of our eyes, this approach is becoming more challenging for businesses. Customers will be more careful spending. Your cost of doing business goes up. Your ability to tap into the huge Asia consumer marketplace becomes blocked by politics. And companies start feeling pressure when having to pay back their borrowings. And you're certainly seeing this in Asia, where Chinese property companies are being hammered on all sides. So the really scary scenario for investors is stagflation. In other words, inflation, but with stagnation in economic growth and employment. Then the companies you invest in, unless they're really special, they will have a hard time delivering investment returns for you. No jam today, no jam tomorrow. The great news is that here in Asia, there is a huge underlying economic growth. Asia will continue to host the largest and fastest growing economies in the world. The reconfiguring of supply chains, especially those linked to Russia and China, will almost certainly cause global inflation and benefit Southeast Asia. And in an inflationary environment, that is the reason why investors generally favor value stocks over growth stocks. Growth equities, as we talked about earlier, rely on gains in the long run distant future. So they suffer more than value stocks do from the discounting effect of rising interest rates. In other words, jam tomorrow starts costing a lot more. Since last quarter, when the Fed started signaling that they intend to raise rates in an effort to battle persistent inflation, investors have had increasingly heated debates about effectiveness of value strategies. To be clear, value stocks are not necessarily always a hedge against inflation and rising interest rates. The argument is whether the tactical cheapness of value is a powerful enough backbone. Now we've already enjoyed fairly strong returns from value stocks over the past few months. And of course, all of this investment thinking happens in the context of a broadly diversified investment portfolio with exposure to commodities, real assets, as well as equities. At Singapore Exchange, we have seen our product shelf of listed companies and ETFs and DLCs, daily leverage certificates. We've seen them all three ramp up in volume, liquidity, and investment over the past 2 years. The Straits Times Index generated 14% total return last year, and it continues to lead in Asia so far this year with 7% total return. Investors and traders have plenty of opportunities to rotate across stock sectors and ETFs, covering different asset classes, geographies, and themes. Soon, investors will have even more choices when our inaugural batch of SPACs combine with fast-growing and new economy businesses, the so-called de-SPAC phase. The exchange mirrors what Singapore itself represents as a wealth haven for Asia. A set of investment opportunities for the long term, building on Asia's secular growth story. Dividends, value, sustainability, and growth. These are the bedrock of wealth creation and wealth accumulation. So this year's Singapore Trading Festival seeks to fling open the windows for a discussion. The unstoppable trends, which are powerful long-term forces, which revolutionize the global economy and affect how we lead our daily lives. As the global economy continues to face headwinds, traders and investors will not only need to account for market uncertainty, but also actively look to uncover new and emerging opportunities to beat rising inflation. With our partners and panelists, and with your involvement in our audience, we're going to identify investment trends and discuss what will drive the stock markets in the coming year. We've put together the content and speakers for this year's event in a way which we hope can provide ideas and insights on how investors and traders can adapt, navigate, and capitalize on what is happening around the world. Over the last few weeks, market watchers have had to contend with the Russia-Ukraine conflict. Traders and investors will further need to brace themselves for soaring oil prices, worsening supply chain issues, and further trade shocks. Inflation, which is already high, could go higher still. The tide of free money is receding. Look out for political risks bubbling up from your various Asian investments. Already during the Trump administration, we saw conflict between US and China leak into the financial markets. The term people are using is the weaponization of finance as a political tool that arises from conflict between countries. There's an example last year, the US government sent an executive order against certain Chinese companies, which led to them suddenly being removed from stock indices and suddenly become uninvestable for US customers and brokers. These things happen without much notice. The financial sanctions applied against Russia in the past month took effect almost overnight, capturing payments, shares, bonds, the exchanges you trade on, the brokers you trade with. The good news, Singapore Exchange is known for being a flight to quality and a flight to value marketplace. Our market continues to attract investors looking for quality, value, and yield instruments in a well-regulated environment that can help grow and protect wealth. We've developed a reputation as the Asian venue for yield and return products. And at the same time, we have a stable and strong base of blue chip and fast-growing companies that will provide investors and traders with the diversity they need in their investment portfolios. In closing, let me leave you with this. However you diversify, the keys to success are to stay invested, to manage your capital, and do your homework. Jam today and jam tomorrow. In this current environment, it is easy to say that the typical trading and investing playbook has been upended. However, as we have seen, there is no shortage of trading and investment opportunities. And we hope that this year's Singapore Trading Festival will unearth insights and hidden gems for you. Thank you all once again for joining us, and good luck in your wealth journey. Keep calm and trade on.